guys, it's Stock Curry, and we have two very important inflation reports coming out this week. We have the Consumer Price Index, or CPI, coming out on Wednesday, and then we have the Producer Price Index, or PPI, coming out on Thursday. Both of those reports will be released at 8:30 a.m. Eastern Time, or about 1 hour before the market opens. Now, the Consumer Price Index, or CPI, is a measure of inflation for consumer prices, the things regular people like you and I go out and buy. And last month, the CPI came in at 8.6%, which was the highest in over 40 years. And this month, it is expected to come in at 8.8%, which will once again be the highest in over 40 years. Now, there was a leak of a 10.2% CPI report. However, that leak was fake. Now, the actual leak for the US may have been fake, but the 10.2% number was not fake. The 10.2% number was real, it just was not for the United States. It was actually for Spain. Spain's inflation was 10.2% versus a 9% expected. And this is kind of the problem that we have. Even if we can get our inflation down here in the United States on the things that the Fed can control, those are going to be called core CPI. That's what the Fed can control. The problem is there is a global economy that affects prices of food and energy, such as oil and the gas you pay at the pump. And the United States by itself, the Fed especially, or any central bank really, is completely unable to control food and energy prices. And that's why they exclude it from their CPI rating, and they only look at something called core CPI. However, with everything included, what consumers actually pay, this is called a headline CPI, and it includes core CPI plus food and energy. Now, the problem is, this is a worldwide issue, and we can see this in Spain with their inflation going up 10.2%. And here in the United States, we're just going to keep going up so long as food and energy remain high. Now, the reason that the other categories have started to go down, that is our core CPI, it's gone down 2 months in a row, and it'll probably go down again in June, is because consumers are spending so much money on necessities, that is food and energy, they don't have any money left to spend on anything else. Therefore, the demand for everything else has gone down significantly, and that is why core CPI is going down. The Fed is not lowering core CPI with their raising interest rates because interest rates are still negative. The Fed is not the one getting core CPI down. It's down because nobody has any money left over to buy anything after spending all their money on food and energy. So until food and energy come down, we're still in deep trouble and heading towards a pretty bad recession. Now, on Thursday, we have the Producer Price Index. And the Producer Price Index is a lot more forward-looking than the Consumer Price Index because the Producer Price Index includes everything that goes into the goods and services that you and I buy. So, however much that PPI, or Producer Price Index, goes up by on Thursday, that is a leading indicator as far as how much CPI might go up in the future. Now, if there's any good news to all of this, it's the fact that food and energy prices have both been coming down over the past month, which means this reading that we're going to get for June is probably going to be the highest reading we get, and every other CPI number from here on out will most likely be lower. In addition to that, even if food and energy prices go up again, the fact is that the reading is a year-over-year reading. And as we start comping against high inflation from last year, specifically last year high inflation started around October when we started getting those 6% readings, it's going to be very, very difficult to maintain these 8-9% year-over-year readings because we're already comping against a 6% year-over-year from the year prior. So what we're going to have to start doing is we're going to have to start ignoring the year-over-year, and we're going to have to start keeping our eye on the month-over-month. That's going to tell us how inflation really, truly is going. Regardless, the stock market is going to be focused on that headline year-over-year inflation, And as that headline year-over-year inflation goes down, as we start comping against high inflation from last year, the stock market will start going up, which is why I believe that these inflation reports will top out in June. They'll start going down from here on out, and this is going to trigger a rebound in the stock market very, very soon. Now, of course, whatever the CPI readings are on Wednesday, this is going to affect how much the Fed raises interest rates at the end of this month. So if the CPI reading is pretty much anything from 8.7% or higher, it could lend credence to the Fed actually doing a 100 basis point rate hike, even more so than the already expected 75 basis point rate hike that's priced in. Now, if this reading comes out super high, especially if it's 9% or higher, that is going to be a significant psychological level that will most likely cause the stock market to absolutely crash on Wednesday and Thursday. However, if this CPI reading comes in lower than expected, say 8.6% or lower, we could see the stock market rally on Wednesday. Now, that said, the CPI report is going to come out about an hour before the market opens. From my experience, whatever happens in that hour between when the CPI report comes out and when the market's open is not an indicator of how the stock market will actually close by the end of the day, unless we get a reading that is significantly lower or significantly higher than expected. But a reading between, say, 8.7 and 8.9, it's going to be very unclear what the stock market is going to do. So even if you see the stock market go down pre-market, it might still rally during the day. And if you see the stock market go up pre-market, it might still fall during the day. So just keep that in mind. The only guarantee where the stock market will continue whatever it did pre-market is if the CPI is 8.6 or lower, then we can expect the stock market to continue its rally. And if CPI is 9.0 or higher, we can expect the stock market to continue to fall. All right, I hope that was helpful for you and helps you get some ideas on how to trade the stock market over the next few days. Don't forget, you can get up to 10 free stocks with Moomoo if you use my link in the description below to sign up. You'll get 6 free stocks if you deposit $100 or more, and you'll get 10 free stocks if you deposit $2,000 or more. We're going to be using Moomoo for our Millionaire Club Challenge that will be starting in a few months. So make sure you go into Moomoo, sign up, get your money deposited so that you can join us in the Millionaire Club Challenge. I have a link for that Millionaire Club Challenge kickoff in the end of this video, so take a look for that. And I also want to remind you to hit the like button and subscribe. And if you're on YouTube, don't forget to hit the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.